Good morning, everybody. It's Chris here from Serene Education with the four majors analysis update for the 12th of April 2012. It's going to be going over the four majors, starting with the euro against US dollar. Brief look at the markets this morning. It starts with the euro daily. Here we go. You can see that I just move in. I have taken a fib retracement from the lows we saw in January up to these highs we saw in late February, and you can see the fib retracement levels on here. Noticeably, we can see on the hard right edge, price has been for the last week just been steadily moving within a consolidation range between the 38.2 and the 50% retracement area here at 1305. It is important that this is to remain negative. You can see we are in a negative downtrend. All the moving averages above price, and we have come from a higher swing. You can see price direction is swinging lower in this case. Our CTC, very importantly, has a red across the board, so we have a red arrow, red candle, and red CTC. However, we are in a consolidated trend after finding a lot of support on the 1305, which happens to be a very, very strong support area. Notice price has bounced along this area on a couple of occasions through the majority of this year. So we want to see if this is genuinely still negative. We want to see a breach of that quite soon. The moment we do get that, then we could see further price fall to at least a 61.8. or 1300 here before we see the 129500, and there's a lot of emptiness between 1295 and the overall low here that we saw in January of this year at 126500. So very, very important that price actually breaks this consolidated trend to the downside to see any further extensions as shown by the chart. However, if we do get a break above this consolidated range to the upside, you'll notice that there are two fib retracement areas here, the 38.2 and a previous, if I just move out, a previous 23.6 of the overall down. This is the overall from the all-time high here in March to where price is now. That needs to be breached, but you can see both these two levels come together. So quite a strong resistance level here, and it would need to do something very, very special in order to get above it. The moment we do get that, then obviously we can see further extensions to at least 132500, back up to 1300, which happen to be a very strong price support and resistance level, before we see these highs being tackled again at 1345 or 1335 and 1345 respectively being targeted. However, as you can see, we are very much in a negative consolidative. Ideally, we'd like to see a break of the low. If we don't get it, as I mentioned, we do need to see a break higher in this area here quite convincingly. If not, then we could still be sitting in this consolidated range for the time being. Just looking at the 4 hour, you can quite clearly see that resistance level above us. A lot of hesitation at that area at 1700 mark, and you can quite clearly see, if I just draw a line through, you can see a lot of support and resistance through this part here, and the RSI is below the 50. Okay, if it's still trading below 50, then obviously it's still negative. I think if we do get a break above the 1700 and above the institution, you'll see we're still trading below the institution, so it's still negative, then you might see price moving favorable. We've got two parts of our potential upside, but however the CTC on the other side is still red, so we're still in a negative consolidated pattern, as I mentioned, and until such time as until such time as we're trading above the 1700 and as well as the institution, then we should still remain bearish. Should still look for potentially bearish setups to continue until that occurs. So as it stands at the moment now, we're seeing a consolidation, bearish consolidation against the overall trend. And if you look at the hourly, for example, price has started to spend a bit more time over the past couple of hours above the 50. However, the institution moving average is still above price. Very, very important. And as you'll see where price is trading at the moment now, 1700 as I mentioned is where we need to be above. So if I just put that in, you'll notice where price is trading at the moment now in relative to that, and it'll give you an idea of what we can see on the 4 hour. So very, very important that we get above this area. The moment we get above it, then that's great, because then we could see potential more positiveness. You can see as we're going in this consolidated pattern here, RSI has been starting to strengthen. That's fantastic. Now I need to spend more time above the 50 period as well, crossing above the 1700. Gets above 1700, then it looks fantastic for, if you look at the daily, 1700, there we go, very strong resistance level. Then we could start targeting potentially 2500 for the foreseeable future. And if you look at the hourly, 2500 is way up here at the price support and resistance level that we saw recently. Okay, so that's how we put it together, guys. Sterling up next. Let's have a look at the daily. You can see quite clearly that price has been consolidating for a period of number of days in around the 158500 mark, and in doing so yesterday in particular, finding a nice bullish engulfing on the previous day, and since this morning on the Asian session moving higher. It looks like we could see price moving up towards the 1600 mark now, trading well above the institution moving average, as well as all the other two small and time frame moving average and our CTC. Even though we don't have the actual blue arrow, ideally, which is what you want to see if you're trading the daily in this particular. As it stands at the moment now, we have CTC blue across the board. The only thing that's not showing conviction is that blue arrow. We have a red, and we still have all three parts of our strategy. So very, very interesting setup here on the actual day. You can see on the 4-hour chart, for example, RSI was quite flat as we went to this consolidator range around the institution moving average. Notice how we had some hammers here at the institution moving average. Price really rallying below, trading towards the next fib retracement area for support, and then bouncing higher and closing higher. It's very, very important if you're trading longer time frames to wait for these candles to close, because over here you could have been going short, ultimately back here and then a bounce, and price correcting in the opposite direction. So you'll notice here the two hammers on the institution moving average on the underside of a fib retracement. However, still above the institution moving average. Very, very important. And RSI mixed ceiling, pretty much on the underside. Okay. However, more buying than selling. Okay. There must be a reason for that. Ideally, if you're seeing these, then obviously you should start thinking, well, maybe there might be an exhaustion, and that institution moving average as well. As long as it's staying below price, then it's still positive. The moment it gets below price, below the institution, then and everything's in your favor, then it should be looking negative. In this case over here, you can see straight, we would like to have seen a close lower than this fib retracement support here. That never occurred. Yes, it did trade through it, but it closed higher, and so we had a bounce. So over here in this case, you can see relative strength trading above all the moving averages. We are seeing price trading above previous highs. Over here, for example, as long as it can find support now and push on higher, then ultimately 1600 could be back on for the remainder of this week. The hourly chart, here again, trading above the RSI, CTCs in our favor, all the moving average below price. We have broken above, we are testing prior highs that we saw on the 10th. A lot of hesitation here through the 11th. And today, this morning, we can see prices testing those areas. As long as it maintains it, then great. RSI, as you can see, it's plateaued out at 55. Prior resistance, prior resistance, prior resistance. Here it's testing these resistance levels, and we're getting to that area. So we want to see price trading above 55, as well as breaking bullishly above this prior resistance level here to give us a confirmation that this is genuine purchasing sentiment, and that should be a great follow through to at least up towards our target of 1600 for the foreseeable future, which is just up here. There's even a bit chance to go even to 1605, but 1600 would be our ultimate target, because that's a major support and resistance level for this pair. Next up is Swiss franc. Let's have a look at the daily. Okay, you can see that the 90-20 here is giving us a lot of resistance, a lot of consolidation, as we've seen on the euro and the sterling. We've seen the same effect on the US dollar Swiss franc. A lot of resistance here, a lot of indecision, spinning tops, shooting stars, and then we've had a bit of movement yesterday in particular, trading the upside, but failing to close above that institution, that's prior support area here at 920. And the Asian session this morning trading lower. However, we are trading above all the moving averages, and we have the CTC strategy template in our favor. So what we want to see is a nice close above the 920, bullish engulfing above 920 to see 926 and overall 93500 being targeted. You get above the 935, and you can see there's a lot of emptiness between 935 and the 960 mark. So if it's to remain upside positive, then we do need to see price moving higher. However, as you can see this consolidation over here, you can see that we've come from previous highs and we're swinging lower. Price is now being compacted as we've tested this trend line, and you can see we come from a high and we're trading lower because we've had a prior lower swing. So as it stands at the moment now, we could see effectively some sort of resistance level now over the past week, as price is being pushed or failing to break above this one. We do need to see a break, a very strong break upside, to cancel this downside trend and then we should start looking for an overall new trend as we swing higher. Until that happens, then we should see 920 as still a very strong resistance level on this pair, and also we should look for further lows to occur. So 910 would be potentially back on intraday as the longer we see resistance at the 920. So if we go to our smaller time frames like the 4 hour for example, you want to see, look at that, a lot of resistance now, hesitation in this area here, and the longer stays below the 920 or 918, which is the case, then ultimately 910 would still be our potential target. First target intraday, second target 900, and below that 895 ultimately, as we find price finding resistance at that trend line swing on our daily. If we look at the hourly chart, notice 920 as I mentioned, a lot of hesitation around this area. You can see our RSI, as we've been trying to head up higher, has been definitely getting lower and lower, and we're swinging a lot lower. So as it stands now, it looks like price is pretty much looking favorable downside. Previous 2-3 hours ago we had this massive exhaustion candle, okay, at the ceiling level here, so it looks like it's pushing it lower. However, we have the institution moving average coming into play now on our hourly here at the 914. Price support along this area, price failed to actually break below that. So psychologically we need to get it below 914 before we see 909 being our ultimate target intraday for all you guys that are looking for short-term trades. Watch out for the support area here at 914 as well as the institution. As long as it remains below the 50 and the CTC still remains negative, look for a break of 914 before we see further extensions to 909 and ultimately way down here to these levels at the 900 again. Okay, last pair of the day is US dollar Japanese yen. Let's have a look at the daily. You can see that price has really been pulling back after price. This pair tested the 8400, which happened to be a very strong price support and resistance level after this massive upside rally that we saw since February of this year. So I'm just going to put that in so you can see the psychological resistance level here. The spinning tops and an exhaustion engulfing here, shooting star at this 8400, and price has been bouncing back. I've taken the low to the highs, and you can see the 23.6 February retracement area here, finding a lot of support. Price actually used it for a major week of support before we saw a breakout to the downside, and then we saw price moving towards the 38.2, and in doing so breaking below 38.2, and then the past day, yesterday in particular, trading at the underside of this. It's important that price actually finds resistance now at the underside of 38.2 before we see further extensions to the downside. Two parts of our strategy on the daily are in place, i.e. the red arrow, red candle. However, the CTC is still blue on either side and shall remain so. Okay, so what we want now is 4 parts. If you're trading the daily or higher, we want to see the red CTC bars on either side to definitely confirm this is still looking bearish overall. So as it stands, intraday 38.2 here at the 8100 would have to be a very psychological strong resistance level. So if we go to 8400, put that in, there we go. Right now, this is going to be our psychological resistance level. The longer it spends time below that area, then the more likely is we're going to see resistance, and previous support will become new resistance, and then we should see price making a lower swing. And in doing so, everything will be in our favor, i.e. we have CTC red, all the moving up to above price, lower swings, everything will be favor for further shorting opportunities, lower swings. So see this swing low, we could potentially, we have a blue bar here that's consolidating. You can quite clearly see we have consolidated now. Price is extended, and in doing so, so if you take the low, the high over here, for example, to this pullback area, to there, you can see 100%, just shy of 100% being reached. Now we have the pullback. As long as that pullback now is the underside of prior support, could be a new resistance at 81, and then we should see price giving us a nice bearish engulfing. That's what we would like to see, a nice bearish engulfing here to confirm that price is looking favorable long for further shorts, and then we could target those shorting areas to at least the 80 is our next target. So as it stands now, hourly, notice there's more happening below the 50% on the RSI, and notice that all the moving averages are above price. Swing low, swing low, swing low, 8100, put that in, so you know where 8100 is in conjunction to where price is trading. Very, very important. You can see a lot of resistance through most of yesterday afternoon going into the open of this morning. Like to see price staying below that. The longer it stays below that, then obviously the more likely is that it's going to become new resistance, and posting new resistance, then we're going to see price falling over the nice bearish engulfing. As long as this stays below the 50, then ultimately all we're seeing is more confirmation that this is going to be negative long term to the downside. So swing low, swing low, swing low, as I mentioned. Are we going to see a nice bearish engulfing out quite soon? Be patient. Look for that bearish engulfing to take you low than the Asian session lows. Here, roughly around the 8500. Break lower, and then we'll definitely target 80 for the foreseeable future. That's it, guys. Hope you have a fantastic trading day. Please ensure that you follow the rules of the strategy if you're trading it. If you are looking at not trading and you have some other things, look at those price support and resistance levels I mentioned on there as potential targets or areas of where price needs to reach in order to get a trading setup. Make sure your money management is in place, and just be patient. Have a look at the news, see if there's anything out there that's definitely going to swing things in your favor. Get that confirmation and trade the confirmation breakout. You'll find we're seeing a lot of hesitation at the moment, and as long as that remains, then you're going to find that price is just going to consolidate for long periods of time. So look for definite breaks, the support and resistance, major support and resistance. Look at previous target levels as potential targets, and just wait for those things to set up. And once you get it, pull the trigger. Okay, so have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.